Okay, good morning, everybody. So today we're continuing with the, just going over a bunch of new programs that are available now. So today we're talking about a 3-month bank statement program. So, you know, 12 months and 24 months is common. 3 months, this is just going to allow just more opportunities, for, you know, maybe uh, the income is seasonal, or maybe there's big fluctuations where, it's gonna suit the borrower a lot more to use the most recent 3 months versus, using 12 or 24 months. So, Brad, tell us a little bit about the 3-month bank statement program.
Yeah, so how's it going, everybody? And thank you for having me on here again, Jacob. So our 3-month bank statement program, it's really for obviously the self-employed borrowers who can't qualify off their tax returns, just as a broad general overview of the program itself. Um, this is a very specific program where it's only for U.S. citizens currently. It's a little bit more restrictive than I would say like a 12-month bank statement program. That's why this program it's very niche, and it's for a very specific borrower type. And you kind of hit the nail on the head a little bit earlier. It's for those very seasonal type employees, or the income is just everywhere, and it's very hard to track it. A lot of times we find that business owners, they have, two or three, maybe even four business accounts, and they deposit money everywhere. I mean, money's flying everywhere. They're depositing it everywhere. It's split up. So on a traditional 12-month bank statement program, typically that's not allowed for most lenders. Um, we don't typically allow it unless the borrower closed down their current business account and transferred all their money to another business account. We would look at 12 months worth of those bank statements. But if the borrower has $100,000 in deposits within a 3-month span, and they're depositing money in Chase, one deposit in Bank of America, so on and so forth, we won't aggregate those accounts together. So that's kind of where the 3-month bank statement program could help that type of borrower out. This statement, this program allows up to a $3 million loan amount, um, as little as 25% down. Now, when I say as little, that's a lot for some people, but for some of these self-employed borrowers, that might be a good option for them, and they're just really looking to purchase a house.
Yeah.
You can do refis on this type of program. We can go up to 70 LTV or 30% equity on the refi. Again, they have to be self-employed, so 1099. Typically, they do have to have a 675 or greater FICO.
Okay.
So they do have to have some pretty decent credit. No mortgage lates, no
Mm.
forbearances, or anything like that. So they can't have any derogatory marks on their credit. Um, it has to be owner occupied. Um, you can be a first time home borrower. We will typically lower the LTV to 70 LTV if they're first time using this program. And the big thing here is that we can look at either business or personal accounts, but
Mm.
we allow transfers to be counted as deposits. So a typical 12-month bank statement program, and this is, we have that program as well. You will, the underwriter, I should say, or myself, whenever I'm trying to help you out with the calculation, we'll take a look at all the deposits into the bank accounts. We won't really look at the uh, debits. We usually just look at the credit side. We back out store returns. We back out treasury deposits. Maybe they got paid their taxes into their personal account. We back that stuff out. We back out any grants or any government loans. We back out any personal loans, maybe they go to Amscot or something like that. We back that out. And then we also back out transfers between accounts. So if they have money in their personal account, they're pushing it over to the savings, and then maybe they transfer it back to their checking. We consider that what's called a circular deposit, so we back those out, and that's on the 12-month bank statement program. But with this 3-month bank statement program, we will allow transfers into the account. So remember what I was saying earlier. Sometimes you have business owners that will spread their money out everywhere. With this program, they can take that money that's spread out everywhere, transfer it into one. We recommend a personal account typically, and we can count all those transfers as deposits into that account. So what we do is we just take that total deposit, divide it by 3, and then that's what we give you for the income. So for instance, if you have 20,000 in a business checking account, 20,000 in their savings, 20,000 in a joint account, maybe they have a husband and a wife or something like that. But they also have a personal, just individual account. They can take that 20,000, 20,000, 20,000. That's 60,000. We divide that by 3. You get a $20,000 a month for income. So it's
Okay.
pretty powerful product or program.
So
Uh,
what about the just verification of the deposit? So when I've done 12-month bank statements in the past, a lot of times I'm getting like invoices and receipts for these, larger deposits. I have clients that, they could have deposits of 40, 50,000, at one time. So I'm getting like,
right.
sales invoices and receipts. Like, um, and then you have some clients that where it's like they just deal in cash, all cash deposits. How do you deal with that?
So on the 12-month, program, any abnormally large deposits will need to be sourced. So maybe you have $10,000 is your typical monthly average deposit, but then all of a sudden you have a $100,000 deposit in the mix there. Usually, our underwriters would ask to source that deposit. On the 3-month bank statement program, we won't source deposits. That's another one of the powerful things about that program is you don't have to go hunting for that invoice or whatever. So it's really nice, and it's a lot easier. It's less hassle, I should say, for you as the broker or the originator, and for your client, so they don't have to go back and try to source those deposits.
So
Um,
no sourcing on 3-month bank statements.
Unless it looks like it's coming from a loan, that's the only time we'll typically source it. So if we see a deposit going into a bank account and it says, um, you know, bank bank loan funding corp or something like that, that might raise some eyebrows. But if it says transfer from savings, or if we see it say cash, branch deposit, $100,000, we won't source that.
Wow, that's amazing. Yeah,
The bank might ask questions if you have 100,000 in cash
yeah.
be deposited, but we won't. So
Okay. Wow,
yeah.
that's pretty amazing. Wow. That's a okay. And then but so as far as like the bars, it's only U.S. citizens basically.
On this program, right? Yeah, they have to be U.S. citizens. They have to have, like I said, a 675 or greater on their credit. Um, they also, like I said, can't have any mortgage lates or any mortgage events, foreclosures, bankruptcies, any of that stuff within the last 7 years. So
Okay, nice. Well, I think this is a pretty awesome program for business owners. I mean,
I'll give you
yeah.
one example of one of the times I was able to use it. I had here in Florida. There's this guy who would buy these boat kits from Dubai, and they were like $50,000 a piece for the kit. And this guy would assemble the boats, and they were essentially small yachts, call them. They were a little bit larger than just like a regular uh, speedboat, but not as big as like luxury yachts or anything like that. So he was able to take that 50,000 and construct it, put it together, and then was able to sell them for 250 to $300,000. But
Wow.
something like that, it would take him 5 or 6 months.
Yeah.
So he was maybe doing one, maybe two a year.
Yeah.
Um, Now that may have been able to work on the 12 months program, but that was it was a lot of hassle
Yeah.
and just a lot of work. So with his FICO, and he was looking to put down 30% anyway. So he was able to just use that program. Didn't have to source the deposits or season or any of that good stuff. We were able to take that $300,000 deposit, divide it by three, and his income was $100,000 average. So he was able to buy, I think, a $2.2 million home. Pretty cool.
That is amazing.
Yeah.
That is, yeah, that is awesome.
The
Wow,
other, the
cool.
other, the other thing you might run into, Jacob, too, is borrowers that have trust income,
Hmm.
or maybe they just have large trust accounts that they don't. Um, Maybe they're not the trustee on, but it's for their benefit. I've seen deals where they've taken money from like an irrevocable trust, they've transferred it into their personal account, um, and then after the loan closed, they just transfer that money back to their trust account. Or part, most of it. So it didn't necessarily have to be in the account for that long. It was just long enough for the loan to close, and then they moved it back. As long
Nice.
as the borrower has the money to pay the PITI, you're
Hmm.
good. So
Okay, great. Well, this sounds like a really awesome program, Brad. Thank you for sharing all this information, and hopefully we can help some people, with this program because it's very flexible, and yeah, this is a great program.
absolutely, yeah, and we'll go over the next one next week, right?
Yeah.
What do you have on the schedule next week?
So for next week, let me see. Yeah, a quick second. So Monday, business purpose loans, uh, FICO as low as 575.
Awesome. Okay. Well, guys, have a good weekend. Happy Memorial Day, and
Yeah,
we'll see you next week, next
likewise, Brad.
Tuesday.
All right, have a great weekend, Brad. Thanks a
You
lot.
too. Take care.
All right, bye.
Bye.
Okay.